The March jobs report coming in weaker than expected, with 103,000 jobs created for the month and the unemployment rate holding steady at 4.1%. Ahead of the report, President Trump's chief economic advisor, Larry Kudlow, predicted strong growth for the economy.
I think it's possible, Maria, to be in the 3 to 4% growth zone. The last 3 quarters, which is really Trump's first year in office, the last 3 quarters we picked up from under 2 to 3.1% at an annual rate. Now, 3 quarters is not a lifetime, I get that, but it's a good start.
Could we get to 5% in the coming couple of years in the U.S.?
We could. It might not be forever, but, we've had such a slow recovery, so-called. It's really a growth recession during the Obama years, not a real recovery. So, yeah, will we get 5% forever? No, but there's a catch-up here.
More of that interview coming up later on in the show. But first, reaction to that forecast and a lot more. We bring in a leader and respected voice in the private equity world. Tony James is the executive vice chairman of the Blackstone Group, the largest alternative investor in the world. And Tony is also the author of the new book, Rescuing Retirement. Tony, it is great to see you. Thanks so much for joining us.
Thanks, Maria. Thanks for having me.
Let me ask you about the backdrop as we get started here. You heard what Larry Kudlow said. I want to get your take on what things look like from your standpoint.
Well, on the employment issue, our companies are having a hard time hiring people. You look at the job creation number, that's one thing, but we have a lot of openings that we can't fill. So you have to take that in context. It's a lot easier to put big employment numbers up if you can find the people to take the job. It doesn't matter. Any industry, any part of the country, skilled or unskilled, we're having a hard time hiring.
What's your take on all of the conversation happening right now around trade? The policies coming out of this White House has been, since the get-go, very business positive, right? A business president cuts taxes, business president rollbacks regulations, sends markets soaring. But now the conversation has changed because of these tariffs. Your take?
Okay. The real tension, obviously, is the U.S. and China, although NAFTA is a whole other thing. I don't think either the U.S. or China wants a trade war. I think China completely understands that a $375 billion deficit is unsustainable, and I think they'll work with us to solve that problem. There's a lot they could do very easily to cut that way down. That's not very costly to China. I don't think they're going to be threatened into it because they're not going to want to look like they're weak, nor is President Trump going to look like he's weak. So we have a little bit of a danger of a tit for tat and escalation, when if you can defuse the situation and talk, I think we'll get out of this without a problem.
So do you think then the public markets are overreacting, or you were just going to say something?
And if we do, I think it'll be good for the economy.
Okay.
I think what Trump will do, he will probably improve NAFTA, and I think we're apt to get a negotiated deal with China, which helps America. The risk is that it spirals out of control because of the ego involved.
So, people get this about China. They know that China puts on all of these restrictions for foreigners coming in, trying to sell to the Chinese people. They know that China has been trying to transfer technology from the U.S. to China. So this was a good move then that the president tried to push back, right?
Yes, it's kind of how it's done. It's a good move, and I think he'll make progress, and I think he's very determined to make progress, because then he can stand in front of the American people and say, look what I did.
Yeah.
And but there's danger in terms of how it's handled.
Let me ask you, the other issue is spending. We just saw the omnibus, the spending bill of $1.3 trillion that the president signed into law. Now we understand that the president is working with the majority leader, Kevin McCarthy, to claw some of that back and actually take some of that spending back. They only need 50 votes in the Senate to do this, apparently, and they are working on it. This is leading me to a subject that is near and dear to you, and that is retirement and the entitlements. But will that matter if, in fact, we see the president come out and say, OK, we're not going to do all of this spending. We are going to spend on the military, but we're not going to do everything that we had in that omnibus. Does it matter?
Spending is a drug. You get addicted on it. It's easy. There's something for everyone. It's short-term benefit. I don't see anyone in Washington worrying about the deficit, honestly, and I don't see any voters worrying about the deficit.
And that's
so. I don't think. I think it's why climb that hill when you don't have to if you're a politician?
Right, but at some point something's got to give, right? We're talking about $1 trillion deficits from here on out now.
There's a lot of things that we might face at some point. but America's good at not worrying about it till it happens.